Looking at Gary Glover's weekly report on Tuesdays, we're understanding what's happening with the indices and the best trading opportunities in the market. Gary Glover's dissected the research and shares this with us on a weekly basis. Good morning, Gary. How are you?
Yeah, I'm good.
We've got the market. It's come down. That met up with your blueprint, sort of like a mid-March low that you were calling at the start of the year. It looks like we did have a fair hit yesterday, Monday, just before this, after this report was written, I should say. So it has come back, and then it's kind of a key question, well, are we going to go further? And I think talking to you off air, that was kind of, well, we're still on track to the blueprint, provided a few things hold up. And then we'll talk about some trading shares. So just on the blueprint side of things, if we start off, the NASDAQ's the first one in the report. It seems to have dropped out and come down pretty hard. Is that still the target range? Would you expect it to come further, or you're still pretty comfortable with that area?
Yeah, the NASDAQ's still the only one there that hasn't sort of got a clear target there, whereas like the S&P and the Dow, because they've expanded 100% of those previous ranges, and because sort of they did pull back into the 50% of the range prior to that, and there was a clear sort of target on the downside. So NASDAQ sort of breaking that range there kind of leaves it a little bit vulnerable there, and also a little bit unclear as to what sort of can come lower here. And the other thing too is with if we are sort of seeing a reemergence of inflationary fears, then we do know that high growth will tend to underperform in those sort of high inflationary periods there. But I think at this stage the data is not really not conforming to that. It's just more the fears around tariffs and whether that will bring there. So. But yeah, so to this stage here, this is probably still the weakest of the indices. So it could even come back to the old high there, which is 16.2 potentially. But I don't think there's any sort of really clear. That's really the only clear level sort of back there. Well, I'm just not sure it'll come back that far there, Chris. I think we're sort of still in that window there. I'd say like the 50 is typically sort of find a low, so usually in that sort of March period, so sort of mid to late March, and then the post-election year cycle is for it to be is in that early April lows as well. So I see that I think 2 of the 3 indices last night actually went to slight new lows. I think the S&P and the NASDAQ broke the low, but then rallied back above them. So yeah, so I still feel like we're on track here. But yeah, so I think those 50% levels on the Dow and the S&P are going to be more significant. And the NASDAQ is probably the one just to be worried about. But I sort of been advising clients, probably growth, I'll just be a little bit wary of at this stage. So it's probably the sector to be, just to be a little wary of. You definitely want to be sort of starting to see a bit of a base and a few high lows before you jump into sort of some of the growth sort of stocks here, I think. So, whereas I think sort of value there, like you're seeing quite a few of the value names already come off quite a bit here. So I think that's where the money will probably go first.
Well, you've mentioned that the S&P 500 is conforming more to the blueprint and also to the expansion side of things. Just quickly for those looking at the expansion, we're looking at the old high coming down to the old low. If we use that range, going from 0 on the left of the screen here all the way up to 100, that full point range, once it surpasses the old high, adding that whole point range on top. So that takes us to the 200 number we have in the top left, all the most recent highs that we had. If that's the expansion, then what you were talking about is coming down and more conforming to the levels, the Fibonacci levels of 150, 138, 1.2, that kind of thing. Your target area was somewhere between the 161.8 and the 150, which we touched, or the S&P 500 touched intraday. And then, as you're saying, just last night sort of came down and undercut that, which would be the 31st of March for the US.
Yeah, so I haven't quite gotten down to that level there, but we got pretty close to it, Chris, as well. So I've had 2 sort of pullbacks sort of near it. So yeah, I mean, like what's probably more important is that upper level there. All we know in the past is that when we square the range out there, that upper range has probably held the market for at least 6 months. So that's probably the most prominent feature there. these sort of range expansions. It's sort of, it's not saying it's going to stop it forever there. It just tends to sort of stop it there for, for a certain amount of time here. So, yeah. And I think, typically these sort of 50 years and post-election years, we do tend to get a cool off in the first quarter, which we've kind of seen. So some of them have gone to, well, actually a lot of them have gone out to mid-March, but yeah, a few of them have gone a little bit later into April there. But, if you look at that, just that post-election year, sort of 4-year presidential cycle there, you'll see that pretty much from early April through to the rest of the year, it's pretty, just a sort of slow recovery sort of from there. So that's, just a lot of sort of lows in that post-election year sort of, sort of built out of sort of early April there. So yeah, I still feel like we're, there's nothing sort of out of character here so far. Yeah. Even though there's a lot of noise going on around tariffs and stuff there. And look, maybe there are some fears around that as well, Chris, as well. So, at this stage there, we haven't seen a major uptick in the inflation data. It could come. We've seen in the past who have had, I've definitely been one who sort of suggested that in the past that you've seen that, that inflation, after you print a lot of money, you get a lot of inflation, and then the government acts to get it under control. It takes a little while to get under control, or takes a long time to get under control. Governments have been a bit too overzealous in the past to cut rates too quickly, and then it has flashed back. So we've definitely seen central banks been a little bit less quick draw sort of here. They've been sort of slower to actually cut rates here than the past there, which is actually a good sign. So that's actually, it's funny actually, we've got central bankers actually who have learnt from the past and actually doing what many in the past haven't done. So, so I think power's been quite responsible here so far. So, so that there is hope there that that inflation, we can sort of keep a lid on it here.
And before we jump to the ASX, I might just quickly run through to the Dow and just check in on that chart, because we're staying with the US. The NASDAQ is not really conforming as much with those Fibonacci levels, those expansion levels and then retracement levels to find support, which has worked. The Dow did come down and probe below that 150. It's a 50% expansion or 150% expansion. And as you're saying, retesting. You were looking for that to retest before bouncing. Is there any more comfort or conviction, or it sits in the same boat as the S&P? Value, tariffs, recession, interest rates, no more conviction in the Dow?
Yeah, I mean, I think we just needed a bit of a pause there. I think we've sort of come back in 3 waves there after expanding sort of 100% of that range and sort of come back to the 50% of range already. So I do think this is the sort of level here around that sort of 41,000 that we'll see some support here. So, it might be a little early here, but I think there's sort of signs there that, we've bounced off. We went sort of slightly below there previously, bounced off there. We've looked like being a pretty aggressive down night last night. We got a pretty decent recovery there. Some actually pretty good volumes as well. Chris is probably as well. So probably might need a bit more time here, but I think the early signs are sort of constructive there. But yeah.
Okay, well, now we go locally. Look at the ASX. ASX 200, which expand 100% of the range. We said we'd like to come back sort of 50%. That's kind of that marker. A while ago, you had said there was a confluence of these sort of levels, so that became the magnet that you were looking at it's come to, and you sort of probe into it. We've managed to maintain, even though we got a whack yesterday, Monday, 31st of March, the market got hit pretty hard. We managed to be able to maintain sort of those lows. How important is holding those lows for the ASX?
Yeah, I mean, you look there, what sort of 21, 22, 23, that sort of 76.50 sort of zone there, kept a lid on that. That was sort of that was the old high there. So we just kept a long time. So it wasn't until we finally broke above that level that it sort of cracked on then and expanded 100% of that range there. So once we sort of broke above that, range, we've basically sort of, we've gone basically sort of 100% of that sort of range break there. So we could have gave a stoke, and it's not uncommon to actually go back and retest and sit on top of the old high here. So, we've come very close here already. That's why I sort of think maybe we've already seen them like on our market. So from here, look, you either, you could come back and get a retest of the low. I think more likely to see a higher low here. But yeah, look, I think if we do come back and retest the low, I think it'll only be a marginal break here, because I don't see follow through here. I think it's had a fair pullback for the Aussie market. So, yeah, so I'll be looking for sort of signs of sort of support here. But look, let the tape sort of guide us there. But the cycle does suggest there that that come sort of early April there, we should be looking on the long side here. So I think any retest on low there, I'll probably be looking to pop up portfolio really.
Nice. Well, that's a good insight to understand how you're looking at that in a sense of the blueprint that you mapped out for us at the very start of the year. We'll put a link to that at the very end of the video for anyone who wants to brush up on it, because it really is something that is extremely useful, and I've been using a lot for many years now, using Gary's reports.
But everyone should be pretty negative, like, because you think about it, Chris, when we're what, 85, 86, 8700, no one was pretty negative, everyone was pretty bullish, pretty positive, there's nothing to worry about. But then now it's sort of come back 10 or 12%. Now everyone's scared, and there's all the worries are out there. So that's kind of what the way it should be. So, sort of the highs are found on good news, and lows are found on bad news, so just, can the bad news get worse here? That's usually the $1 million question. Yeah, oftentimes oftentimes markets find highs when you can't get any better. So, and I guess the lows come in when you can't get any worse, so, yeah. And it's probably funny because I think what's the name of it? Not Independence Day or something there, what they call it. The Trump's given it a name there.
Oh, yes, the 2nd of April, the Liberation Day.
Liberation Day. So I mean, sort of like that's kind of that's him sort of implementing all these tariffs there and putting them out there. So it's kind of like it could be by the rumor sell fact here, into that sort of 2nd of April, really. So which does match up with some of the sort of the cycle timings as well. So it's just interesting there that's kind of that event here, and now we've even got a name for it. It's coincided with this pullback. So yeah.
It's looking back into the US history, something I haven't done a lot of, but looking at markets, there have been 2 instances in the US history where they have introduced massive tariffs to their trading partners. And once was sort of the Great Depression that then led into World War II. So we know how that one turned out, and it was terrible. The tariffs were high. The second one, I think, was in the 70s, and the tariffs really only lasted about 4 months, and they were all wound back because it was inducing a recession in the US. So it's possible. It has happened. So Trump could be a student of history, or his advisors could be, and they could be a tactic to decrease interest rates and then the cost of debt. Who knows? So we could just be politicizing and speculating. But there's twice in history, and the one in the 40s only lasted 4 months before they were unwound. But that's not what the report's about. You've got the trading shares now. Something that you and I have been talking about a lot off air, and you've been noticing, is the behavior of the uranium companies on the ASX. And you've got Boss Energy in here. You've got a 1, 2, 3 happening. Now, that's not a 0, 1, 2, 3. So what's the 1, 2, 3 you're looking at, and why have uranium companies caught your attention in the last few weeks?
Yeah, it's just a sort of broadening pattern there. So like a lot of, broadening tops and broadening bottoms there have that sort of 3 overlapping there. So what that meant, obviously this looks like a pretty decent downtrend here, but normally like when a market's really aggressive, there's normally, like the pullbacks there will sort of step down. So basically like the last low and then a rally up and it breaks below there. It'll sort of like a staircase there. And they'll kind of build on top of each other. And then a weak market, they'll leave spacing there. But then this has gone to a new low here and then rallied back above. And then it's just gone slightly lower on the second time and then rallied back up well up in the range again and then just gone slightly lower again. So we're only going slightly lower each time there. So that's kind of what McClary refer to as like a corrective sort of trend there. So that's not a strong trend. That's more of a sort of sideways type of trend, even though you have been heading down, but we're only going marginally lower each time. So they used to sort of look for this sort of third thrust sort of down here as a, often a turning point there. We see it with tops as well. Stock's been running for a long, long time, and all of a sudden you get this three thrust sort of top there, and then it rolls off. So can mark highs and lows, these sort of broadening patterns as well. So it's just pretty interesting there. We've definitely seen uptick in volume. We've seen a decent pullback in the market there. We've definitely seen the uranium sector being pretty strong the last few weeks, while the rest of the market's been pretty weak. So he's putting its sort of hand up to say that, we could be a sector that, that might potentially lead here. Still got a bit more, got to prove itself a bit more here, but we're definitely seeing some interesting technical signs there for some of the stocks, and we're definitely seeing some strength in the market while the rest of the market's been pretty weak here. So I think really, apart from sort of gold and uranium there, most of the sectors have been pretty weak here in the last few weeks. So showing a little bit of strength early here. So like this one here, just needs to tighten up a bit more, the BOE. But I do like the Bannerman there on the daily there. I think that's sort of showing real strength there, sort of nice little bounce out of that low. It's pulled back pretty tight there. I think it sort of definitely stayed in the top half of the bounce, the BMN. And I just think just sort of showing up, quite firm there. And if we go back and look at the last few lows, the Bannerman tends to sort of do something similar. Sort of, jump out of the gates, pull back in a bit of a tight manner there, and then pop out the side, pop out the top there. So I think the last 2 or 3 lows have sort of done exactly the same here. So look, not always going to repeat, but it does look interesting again here. There's just pretty good volume on that rally out of the low, and being pretty impulsive in nature as well. So just some positive signs there really for it.
So you're seeing sort of consolidation back into that channel, but well and truly off those lows and holding that recent rally. Unlike the market that has come down, the US indices are now back down near their lows, and the Aussie nowhere near in a relative performance. So what you're seeing with Bannerman, while it is not in the top half of this chart, you're actually seeing relative outperformance in the recent history. Is that a fair?
Yeah, 100%. Yeah, well, the rest of the market's getting sort of, has pulled back 10 to 20%, some of the stocks. The stock's actually sort of rallying here early, while the rest of the market's been sort of showing some weakness there. And I guess, I just look for sort of elevated volumes coming in, look for a bit of an impulsive nature. So looking for that, that fast moving trend as well. And then hopefully it pulls back on lighter volume and holds up here. So far, some solid signs there. But it is a mixed bag in the sector as well, like every other sector as well. There's definitely some stronger names there. So I think Bannerman's definitely one of the stronger names there at the moment.
And then different space, Ramsay Healthcare, still down, but what has been happening is kind of like it's hit the brakes. So it's fallen for best part of a year. And then the last quarter, so this calendar year, it's just coiled and compressed so much in comparison to its relative performance. Even last time it coiled and compressed, it's even tighter.
Yeah. Look how tight. I mean, it's like literally 14 weeks there, Chris. So it's really, really tight. Right? So I started sort of looking at the daily chart, trying to, when I was going to present that, but I thought, if you look at the weekly, that shows you, I mean, that's a massive trend all the way down here. And then all of a sudden now we've got this really tight band here for what has been a fairly volatile stock, fairly trending to the stock. And now we've sort of tightened right up. And what has happened there is you can see the volume has really, really been elevated here. So we've got, possible accumulation taking place here. But just kind of, if you remember that, I think it was 2017, the index went sideways like 19, 20 weeks. It might have been a 110-point band. And then once it came out of it, I think it moved about 6 or 7% in the first 4 weeks. And I think it might have moved about 12% in about 8 to 10 weeks. So once they come out of those really long-serving sideways sort of tight bands, they pop pretty aggressive. So look, this could pop to the downside, have another down leg for sure. But I think if this sort of pops out of the range here, it's definitely worth following here. Just when we see those, I mean, it's just like that, Davis box sort of rectangle sort of, theory. So I think, if I'm not mistaken now, I think that rectangle in Gorkowski Encyclopedia, Encyclopedia chart patterns there, that's kind of like got one of the lowest value rates as well. So once they come out of that really tight band, the failure rate of failing is pretty low. So not to say, some might fail, but I think I think it's about 97%. I think it's actually one of the lowest failure rates for any technical pattern. So that's why it's really interesting.
It is, and I do remember interviewing you, and we almost got to the point where we considered not talking about the indices every week. Nothing else happened. But Ebos, EBO, this has higher lows, and this is something that we're more familiar with seeing in your reports, is the zero, the ultimate low.
Yeah.
1, 2, 3 higher lows. So how rare is this type of pattern given the current cycle that we're in?
Well, when we're going back and look at those model books, Chris, 2 years after a bear market low and seeing which stocks have performed the best, the ones that were making higher lows while the rest of the market was making new lows was what is the prominent pattern there? So this one should be watched pretty closely here, Ebos, because this has had us low in July here, and since then we've actually got 3 consecutive high lows here. So the stock's actually holding up really well versus a market which is going the other direction. So the market's actually probably been going down since that same period there. So this is definitely one stock actually showing real strength there. So I wish I could find a lot more charts like this, but we're just not seeing too many showing the same sort of strength that this stock is. So this looks pretty interesting.
Well, we're definitely watching that because, like you said in the model books, this is a very common pattern when we see markets turn. The leaders have already set up something like this before the breakouts. National Australia Bank, that was a leader, and it looks like it's not going to be a leader in the next cycle. Defying gravity with valuations, nothing like Commonwealth Bank, but still in that same group. Volumes are elevated on the way down. How important we can't quite see this. Is this a previous high to the left, or is it?
It's probably a previous high there, but probably I always look for those things to sort of, usually when the market's had a pretty strong run like this, you'll see that when the market pulls back, it'll pull back to the point where the last consolidation was. So before the last rally into the high, it'll come back to where the last consolidation zone was. So just sort of see it. Typically, it will come back to that zone there. That's so I sometimes people try and buy these strong names coming off these high, these really high highs. But I think if you just waited for it to come back to the consolidation zone, you'd just be a lot sort of safer there. That's a zone where I sort of find that's the first area I typically find some support coming in. So it's a 20% pullback for NAB, so fairly large sort of drop for it. So it's just an area I expect to sort of find some support here. So I've already bought a little parcel here just above 33. If we get some sort of tightening here, maybe a first high low there might look to add to that. But I think I still think this will probably only go back to maybe the midpoint of that fall. Maybe it goes back up to around 60% of the drop or something like that. Something like that. So but it's just nice to sort of see the banks come back to at least a more reasonable valuation if we look at them historically. So we did know it was going to happen at some point, but and it normally happens pretty quick too. That when they reset pretty fast. So so that's pretty there. I think probably the big thing for me is what's been surprising so far is probably the most expensive bank has probably pulled back the least. So so I was expecting that to sort of probably have one of the bigger pullbacks, which hasn't happened here so far. So but maybe that comes sort of later.
Well, a different space completely. GrainCorp in the commodity space that is known to trend and range. It's down in the bottom end of the range. We've got FB. We haven't seen too many of those recently, the false breaks. But this is the type of market where we can see them edge out. You've got GrainCorp, so it had its lows. We'll look at the time here. April 2023, October 2023, and then where it is now. So I guess you're probably going to look at the volume when you're looking at false breaks. Is that an important characteristic?
Yeah, two things. I mean, obviously, like in recent years, we've definitely seen these markets, sort of really have quite wide ranges there. So, and some big moves in those ranges as well. So we're seeing, some stocks, sort of like Combank trading to 29 times, just some abnormal type of moves. But But then you see them come back, seeing stocks had really, really deep pullbacks in the range as well, but then having big bounces follow as well. So I think we've seen quite a few false breaks here, margin new highs and lows here in the last few years. And then that's been a key turning point for not all of them. Obviously some have gone lower and continue higher, but a lot of them have actually turned after sort of going into margin new lows. So we do look for that increase in volume there, sort of look to sort of see possible sort of accumulation taking place. So we're definitely got an uptick in volume over the last sort of 6 weeks. And we just got a marginal new low there as well. And so like commodities in general have been pretty buoyant. It's just the commodity stocks are probably been less buoyant here. But commodity prices in general are fairly strong across the board. So so I think it's pretty interesting here. I've just got a little starting position there. I think it sort of holds tight here, which so far it has done. We might look to sort of add to that position sort of later in the week.
Well, a different space, Credit Corp, CCP, similar sort of sense that it's been quite whippy in its movement, but still had a general downtrend. The FB on the charts indicates that it's a very, very marginal undercut because it's barely protruding below that horizontal.
Yeah, I love those little 1 cent, half a cent or 2 cents sort of false breaks. That's often sort of how they do sort of come in there. Seen a little bit of volume that first week there. Haven't seen the volume follow through here. So you definitely want to sort of see this hold here. Kind of think it really needs to sort of hold here for 2 to 3 weeks here, Chris, off that low there, before I'd sort of add to it there. So do have a pretty tight stop in here. I guess the beauty of the false break is that if you're wrong here, you've got a pretty
Tight stop.
Yeah, you've got a really sort of tight risk there, so you're not risking too much. And if you're right here, then obviously you've got a bit of upside here. But in terms of adding to this there, I think you probably want to see this hold here for 2 or 3 days. I know sort of, I think it might be Toby Cavell or something like, he used to sort of use the 3-day, but maybe the 3-week here in a weekly chart as well might be more prominent. So if we can hold here for 2 weeks and then the third week break above the previous 2 weeks here, that's always a good sign. So I think if it holds here the next week here and then breaks above this week's high, that'll be a positive sign here. So, but yeah, it looks interesting anyway. Yeah.
There's some very interesting charts to look at. And as you said, Liberation Day, who knows, that could be a turning point. The NASDAQ not doing so well with the high growth, and generally inflationary periods don't tend to do well. High interest rate, less so as well. You've got you've got a few trading positions and you've got the blueprint. So we look forward to checking back in next week on the blueprint to see if the Aussie held and the next lot of insights. So that end, we say thank you very much, Gary Glover from Novus Capital.
Thanks, Chris.